Okay, so think about this for a second. When a local business opens up, success is, well, it's pretty clear cut, right? It's all about profit. But what happens when your local government sets up shop, say to build a new public park or fund the local fire department? They aren't trying to make a dime off of you. So how do we actually know if they're succeeding? More importantly, how do we hold them accountable?
Well, welcome to this explainer. Today, we are actually taking a deep dive into the 2025 Handbook of International Public Sector Accounting Pronouncements. Now, I know that sounds like a bit of a mouthful, but this massive, intricate document is literally the global blueprint for how governments report their financial reality to the public. It is exactly how they prove they're doing their jobs. To unpack all of this, we've got a pretty straightforward roadmap for today. We're going to start with the public sector difference, meet the standard setters, identify the primary users, look at accountability and decisions, map out the scope of reporting, and then finish up with the traits of good data. All right, Section 1. The public sector difference, a unique reality. So, while private businesses basically exist to generate cash flow and make a return for investors through direct exchange transactions, you buy a coffee, you get a coffee, governments operate in a totally different reality. They exist to deliver crucial long-term services. And the real kicker here? They use involuntarily raised funds. Because their primary goal is delivering services using your mandatory tax dollars, standard profit and loss sheets, they just don't tell the whole story. And this dynamic perfectly defines taxation, which is technically a non-exchange transaction. You pay your taxes, sure, but the specific benefit you get back, like driving on a newly paved road or having public defense, isn't directly tied to your exact payment amount. Because of this massive disconnect between what you pay in and what you individually get out, extreme financial transparency becomes absolutely vital.
Which brings us to Section 2, Meet the Standard Setters, the architects of transparency.
First up is IFAC, the International Federation of Accountants, representing over 3 million accountants globally, which is a huge number. They serve the public interest by supporting the development of really high-quality international standards. You can think of them as the foundation, providing the funding and human resources to make this global accountability possible.
And IFAC proudly supports the IPSAB, the International Public Sector Accounting Standards Board. Now, this is the completely independent board that actually writes the standards, covering both accrual and cash-basis accounting. Their home mission, their entire reason for being, is to improve the quality and comparability of financial information reported by public sector entities all around the world.
Moving on to Section 3, the primary users. Who are these reports for?
Well, you might be surprised to learn that you are the target audience. You, the citizen, the resident, the taxpayer, along with the elected representatives who work on your behalf, are the absolute primary audience for these financial reports. Governments are accountable directly to the people who depend on their services and, of course, provide their resources. So the crucial point here is that general-purpose financial reports, or GPFRs, exist precisely because everyday citizens and taxpayers cannot simply demand a custom, tailored financial audit from their government whenever they feel like it. I mean, you can't just call up the Treasury and ask for a personalized spreadsheet of exactly where your specific tax dollars went. So GPFRs are designed to meet your broad, general needs for clear, comprehensive information.
Let's hit Section 4. Accountability and decisions, the dual objectives.
First and foremost, it's all about accountability. Governments literally have to use GPFRs to prove to us that they provided services efficiently, complied with the legally approved budget, and safely managed the massive resources we entrusted to them. It is essentially the ultimate civic receipt, showing us exactly how our resources were handled.
Furthermore, it's about decision-making. This transparent data actually empowers users out in the real world. For citizens, it lets you make informed decisions at the ballot box. And for donors or lenders, it really helps them decide if they should continue funding specific government activities. At the end of the day, good data drives good civic decisions.
Next up, Section 5, the scope of reporting, beyond the balance sheet.
Because the goal isn't just making a profit. The scope of public sector reporting has to be super comprehensive. I mean, it goes way beyond a simple balance sheet. These reports must include things like comparing actual spending to the legally approved budget. They have to detail long-term service delivery achievements, like did they actually build the roads or the schools they promised? They even need to include prospective forward-looking expectations about long-term program sustainability.
And finally, Section 6, Traits of Good Data, the qualitative characteristics.
First off, the data has to be relevant.
It either needs to confirm our past expectations about how the government performed or help us predict their financial capacity for the future. Basically, if the information doesn't move the needle on how we view their performance, it simply shouldn't be in the report.
Next, it absolutely must be a faithful representation. This means portraying the true economic substance of a transaction. The data's got to be complete, it must be totally neutral, meaning free from bias meant to influence your behavior, and it has to be free from material errors. It is, quite simply, the unvarnished truth.
But here's a very practical reality. Even the most perfectly neutral data is completely useless if it's buried in dense jargon that normal citizens can't grasp, or if it's published years after a decision needs to be made. So data must be understandable, and it absolutely must be timely.
Comparability is also super important. We need to be able to compare a government's current data against its own past performance. Or, even better, we should be able to compare it against similar public entities in other jurisdictions to see who's actually managing resources more effectively.
Lastly, there's verifiability. This simply means that if you took a group of different, knowledgeable, and completely independent experts and had them look at the data, they would generally all agree that it represents the truth without any material error. The math has to check out, no matter who's running the calculator. Of course, in the real world, compiling all this data has practical limits. Standard setters have to weigh the constraints. They have to decide if omitting a tiny detail is truly material enough to actually influence a citizen's decision. They also have to ensure that the actual benefit to the public of reporting a specific piece of data justifies the literal cost of the government collecting and processing it.
So now that you hold the blueprint for public sector accountability, understanding the unique nature of government finance, the standard setters, the vital need for your oversight, and the strict traits of good data, the most exciting question left is this. Is the entity representing you truly measuring up? Go look at their reports, apply these concepts, and find out for yourself. Thanks so much for joining me on this explainer, and keep learning.